Yo, good morning, everyone, and welcome to the Morning Market Report. I am Army Piper. This is the Piper Academy Network. We got some economic data came in this morning. We're starting to get a little pullback up, but the levels are still ringing true, guys. We talked about these levels here all the time. We're going to be taking a look at those. Why did the markets dump on strong economic data? We had good job data. Wages were a little but whatever. We did have some good job data. Unemployment came in cooler than expected, came in under, it went down. So why did the markets dump this way? It's all about the 10-year yield, guys. I know I keep banging that drum. I'm going to keep banging it until everyone out there understands Economics 101, the 10-year yield, the thing to watch right now. Looking at the crypto bubbles here behind me, guys, we do have a little bit of red there on the hourly. If we take a look at the daily, though, daily giving us a little bit because overnight we did get a little pump in the markets. FD White talked about this last night on his channel when he was hosting the crypto nightcap, that he could see us get a little bounce going into that data since we got that data starting to get some market sell-off. Real fast here just to take a look, give this a refresh. And it looks like right now, the markets are trying to open up in the green. We've got let's see here. No, that is on yields. I don't want yields. I want the pre-market, sir. Thank you very much. There we go. Pre-market, looking at those, we do have the S&P, NASDAQ, and the Dow Jones looking like they're down a little bit. I'm not sure why. There we go. S&P sitting at 0.76 to the downside. NASDAQ down about 1.4%. And then the Dow Jones down 0.5. And then you guys take a look over here. That is the one. It's on the thumbnail. The 10-year right there above my head, up to 4.761. 5% is the threshold on that, guys. We're going to break all this down, help you guys understand. We're going to take a look at the charts, take a look at the markets, to figure out where we can make some money in this thing, because that's what we're here for. And then all of that and a whole lot more right here today on the Morning Market Report, guys. Let's get it. Class is in session. Yo. Welcome, guys. I appreciate everyone that is joining us here today for the live stream. You guys rock. You guys are why I get up every morning, drink my coffee, look at these charts, and get here. That, and plus we like to make that money. But shout out to everybody in the chat right now. Let's go take a look and see who all we got in there real fast. We have, let's go up. We got Harp in here with us, French Toaster. We got Robert Mulligan, BC Port Corp, the host of Good Morning Crypto in the Morning. Ninja Glocks in here with us, Indie Rock Crypto, IRCIRL. He is here with us. Username is in the house. Piper is back, baby. Username said, I'm wearing the red shirt, bro. Wearing the red shirt, don't you know? Got Ahsoka, I got your message. I will get back with you today. I got 3 classes today and a worker coming to the house, but we will get in touch and get you out your thing. And then we got gifted memberships. Who got gifted memberships? Who did the gifted memberships? Alexandra G. I love you. Best mod in the biz. Gifting some memberships out there. We got Al Jr. picking up one. All Set picked up one. You guys rock. I love it. Love seeing it. Who else we got in here? We got Indie Rock Crypto. I said All Set. We got Eric Wallen in the house. He said, let's do it. And a lot more, guys. Crypto Trades is in here with us. Jeffrey Stone. Stone Cipher is in here with us. And then Trade Intuition, the host of the Trade Academy. Melissa S. Got to give her a shout out. Much love to you. All right, guys. If I missed your name, I apologize. But one name that I can't miss, it's my co-host today. Let's go ahead and bring him up. He's going from drinking whiskey and hanging out with TradeFly to joining me over here and drinking coffee. Actually, he's drinking green tea. It is the man, the myth, the legend. What's up, bro? It is FD White. What's up, man?
Oh, I can't complain, man. The job numbers looking good. Economy is looking strong, quotation marks. So we'll see what happens, man. You've been calling for that 10-year. Yeah, we've been calling for that. You've been calling for that 10-year to come up, man. So we got to pay attention to that. I'm looking at
all about the 10-year, bro.
Yeah, I'm looking at that. I'm looking at a 5 handle, maybe soon. So we'll see what happens with that. Last time, I think that's where a lot of economists and people say that's where the problems start, at 5%. So. We'll see. Because a lot of economists have been wrong for a long time, the last 2-3 years. But that 5 handle on the 10-year is
they were way off in 2007 too, because when the 54 economists were asked by Bloomberg if they expected a recession in 2008, 2 out of 54 said there would be a recession. So, yeah, I don't listen to the economists. I just look at the data and do the analysis myself. I trust myself more than most economists. So,
Yeah.
FD White, check out the show. Oh, yeah, I did check out the show. FD White, did you watch an episode last night of Interior Chinatown?
I did not, man. My son wanted to watch some, I don't know, some kid show. So I had to bite the bullet and watch that with him. Then I fell asleep. So I will
So,
do it tonight.
I watched it.
It was
It
good.
it's a little interesting, but it's a little weird too.
Okay.
It's something that I could probably get into, but the wife didn't seem to dig it too much. So I don't know. It might be one of those shows that I have to like sneak back here to my studio and watch it back here while I'm doing stuff. I don't know, man. We'll see. But yeah, I did check it out. I think you'll like it. I don't know that everyone. It's not for everyone. It's not for everyone. It's for weird people like me. Let's
Okay.
go check out the
I'll watch
news,
it too then.
FD. That's right. Let's go check out the news and see what we're seeing over here. Break all this data down because we did get some employment data, labor market data, we'll call it, that was not all that great. And I'll show you guys what that was. Shout out to everybody that's joining us. If you guys have not done so yet, smash that like button and don't forget. I did not put FD White's links in the description below, but we have the mod queen here. I'm sure she'll take care of that. You guys need to make sure you follow him. Let's jump over to the news and let's talk about everything that you need to know today in the marketplace, guys. Let's give that a little push. Get that white line off. There we go. Looking here at the market cap, guys. Refresh this because I'm sure that's changed a little bit. Yeah, $3.42 trillion right now is the market cap. Looking at the volume down, it's slowing down. Volume is slowing down, 10.8% to the downside on the volume. Let's jump over to X. Take a look at what Mukul was saying here. Mukul says we are at 44 points out of 100 for the altcoin season. Not even close, guys. We got to get over that 50% hump. The CMC Fear and Greed Index is sitting at 43. We're in neutral. We're right on the cusp there of going into fear. People are afraid right now with good reason because until we see a change of that 10-year, there's a reason for pause. I'm not saying sell everything, but you should be concerned about the markets and the longevity in the short to midterm on what it could be doing. So, yeah, Fear and Greed sitting at 43. Let's jump over here and take a look at the liquidations in the past 24 hours. In the past 24 hours, oh, well, yeah, get back down there. Let's go. Work with me here today. Past 24 hours, 115,150 traders liquidated. Total liquidations coming in at $340.7 million. Largest single liquidation happened on Binance. It was Ethereum, $12.1 million liquidation there. If they were following the show, they know the levels to watch. That's just all there is to it. Let's jump over here and look at these crypto bubbles again. We are getting a little bit of a green move here on the hourly, guys. Little pull back up, but Bitcoin's starting to pull back down. Markets are not turning around quite yet. We're going to go see what those look like in a second. So let's go down here and look at Bitcoin. Bitcoin's at 93,600 right now, up 1.1%. On the daily, but quickly losing some of that back here on the hourly as it slides down to 0.6% on the positive side. Ethereum is sitting at $3,241, down 0.1% here. Any big moves? Let's just focus on that right now. Looking for the big moves. Solana's down 0.6%, nothing major there. 3% upside on Cardano at 92 cents. Not bad there. It held some key levels down at 89 cents, obviously. SUI up 8.1% at $4.96 on the daily. So, yeah, some of these alts really popped off on that overnight move for Bitcoin. Rounding out the top, though, nothing really big. Rounding out the top is Leo Token at number 20 on the top 20 move there. Shiba Inu has gone up one spot and Chainlink losing one spot there. They swapped. All right, let's look at the stock market, guys. Dow Jones currently down 50.54%, S&P down 0.65%, NASDAQ down 0.78%. That treasury yield for the 10-year boosting itself up there, 4.743, guys. This morning, this thing was pushing pretty darn close to 4.8%. I'm watching it all close. Retro Mike Tech said, dump it all to zero. Dump it all to zero is what the man says. So let's get into this data, guys. So non-farm payrolls was at 212,000. Looks like they revised it. Let's go see what they said here. The U.S. economy added 256,000 jobs in December 2024, the most in 9 months. Strong, right? Strong. Maybe a little bit of manipulation there on those numbers, just so that they can go, look, the last month we were in office, we had one of the best months in 9 months. I don't know. We'll see. Following a downwardly revised, they revised it down 212,000 in November, which means that in November, when they put out numbers, they had to come back and go, yeah, it wasn't that good, right? They back of the room, they put it out on day one. Look how good it is. And then when they come back a month later, they slide it on the table in the back of the classroom and don't tell anyone it's there. You got to go look for it. Downwardly revised 212,000 jobs in November, once again beating market forecast of 160,000. Figures for October are also adjusted, resulting in a combined downward revision of 8,000 jobs for October, November. So we're seeing some false data. Inaccurate, we'll call it. It's not false. You're not lying if you just had it wrong, right? In December, employment trended up in healthcare, 46,000, government, 33,000. Thank you, Mr. Taxpayer, and social assistance, 23,000. Also, thank you, Mr. Taxpayer. So that was that's where it went up, guys. Also, retail trade added 43,000 jobs following a 29,000 job loss in November, mostly due to clothing, accessories, shoes, jewelry retailers, general merchandise retailers, and health and personnel. Meanwhile, employment declined by 13,000 in manufacturing, major piece of the economy there. And then considering full 2024 payroll, employment rose by 2.2 million, an average monthly gain of 186,000. So a lot of revisions going on there. Was expected to be around 160,000 on consensus forecast at 200K, came in at 256,000. So that's higher than this, right? That's good. That's a good. We'll put a check mark up there for a good mark on the economy, right? Let's go take a look at unemployment. Was at 4.2%. No revision. Stayed solid. Looking at this, we see, I've got white lines behind me. I want to have to close those blinds in a minute. We see that it's at consensus was 4.2, forecast at 4.3. We came in at 4.1. Unemployment dropped. The unemployment rate dropped 0.1%. Good data. That's two lines. Two lines of good data there on the market, right? We'll take that. Well, that's a good thing. So let's look at the hourly earnings here, though, and the hourly wages and for month over month and year over year. It was at 4.4%. They expected it to be 0.3, came in at 0.3. Earnings month over month went down. Year over year was supposed to be at 4, came in at 3.9. Earnings year over year went down. What am I missing over here? We all love Ball and Wallen. He is. Ball and Wallen is the composite man. Participation rate came in static. What it was, 62.5. Forecasted that it was going to be a little higher, neutral. So we did get good job data from non-farm payrolls, but there was a lot of revision. And we did get unemployment rate that was better than expected. Okay. Matter of fact, opposite direction of what the forecast was. But we saw that earnings, right now, things are getting more expensive. We know that, right? Inflation's coming back. 10-year yields going up, making loans get more expensive, despite the Fed rate cut. At the same time, hourly earnings month over month and year over year went down. So a little bit of bad data in there also. I just wanted to break that down for you. Looking at this now, guys, this is, I want to explain. Let's jump over here to Cam. Let's talk to FDY. So here's the bottom line. Let me close my blinds first, because I've got white lines moving behind me. Well, it kind of looks cool. It's not cool. It's not cool at all. There we go. So let's talk about this data and why this all matters, because you were talking about this morning, FD. We talked to the phone. Let's talk about the interest rates that Fed has to pay, because that's a big factor. So if you want to touch on that, and then we'll dive in and bring this back to the 10-year yield and why these job numbers caused it to do what it did. Go for it, man.
Yeah, so it's like, darn if I do, darn if I don't. Like, they have to roll over so much debt this year, and this debt has to be rolled over at these high interest rates. So as long as they're keeping these interest rates high, they're actually shooting their self in the foot as well. So I don't know. I don't know what they're gonna do. I don't know what they're gonna do. My thing that I have in the back of my head is that, okay, they gotta find some excuse to cut interest rates. It's saying, okay, from in the forefront, it's like, okay, we can't cut rates. The economy looks pretty strong. Job numbers are looking pretty good. Unemployment is still at record lows. If you zoom out, So how can we manufacture something in order to cut interest rates? So that's what I'm waiting on. That's what I'm waiting on. I know I need OC here so I can put my conspiracy theorist hat on. But it has to be something that comes around the pipeline that's like, okay, we have to cut rates now. We have to cut rates. And it's an emergency.
Mhm.
And I don't know what that could be. Maybe it's the stock market going down a little bit. I think the stock market has to start going down like
So
20%. I
let me
think that's
ask you, what hurts the economy more? Weakening labor or rising inflation?
oh
Which
man.
one's easier to fix?
Oh, the unemployment. Unemployment is much
Easily,
easier. So
right?
they gotta, yeah,
So,
easier. So they have to,
so
if they got to pick the two evils, they're gonna definitely pick not hyperinflation, but more inflation
correct.
to subside that unemployment if the unemployment
Correct,
starts.
which means they can't cut rates too quick,
Yeah.
right?
So
And so
it's
the only
thing to be
reason for them to cut rates is showing a weakening of the labor market. We just saw today they're strengthening in the labor market, which is a big reason why we're seeing this. Let's jump over here real fast and I'll show this. Guys, we're sitting right now 97.3% chance that we get no change to the Fed meeting, the FOMC, the rate decision on 29 January, which is coming up real soon. So right now, 97.3% chance, no change. That is
yeah.
the reason right there. It's a trickle effect, right? Job data comes in good, inflation is still sticky on the rise. That's your baseline. We get the new data comes in and says labor market is looking decent. It's not on a collapse. It's not going downhill. All right. Matter of fact, some areas a little bit better, right? Mind you, probably a revision coming next month. Just saying. But then they go, okay, well, we don't have to cut rates. We don't have to cut rates. Right now, we're looking decent on the side of labor market. We're looking bad on inflation. Cutting rates is not what we want to do when inflation's going up. So we don't have to cut rates right now. The investor sees that global guys. We're talking, how many people want to buy the 10-year bond, right? Debt that we owe to China is not because we borrowed money from China. It's because they bought our treasury yield, right? They bought our bonds. That's why we have debt to other countries. If you guys don't know that, it's not like we called up China and said, yeah, can we borrow $10 trillion? No, they bought our bonds. And so we owe them money. That is what debt is for the nation. So they look at this and they're like, U.S. is not going to have cheap money for a while. I don't want my bonds. And so they sell them off, making that 10-year treasury yield go up, right? As that 10-year treasury yield goes up, it puts a lot of pressure on the markets. And I've got some articles that I'm going to talk about here. Let's jump over here and I'm going to see if I can get you on my screen with me here. FD, give me 1 second and we'll see if I can drop you in here. That way we
I
can
do
look
have
at
a
these
theory
together.
though.
What's that?
I do have a theory that may happen. Once you can
What's
get me
that?
on the other screen, but I do.
Okay.
So
Okay.
yeah, we'll talk about it once we get on that screen.
Go for it. They can hear you.
Okay, so what I'm looking at, man, is I'm kind of big over there. It's
Yeah,
big
it's
man.
because you're an OC spot, man. He's a big dog.
Okay, there we go. So with these interest rates being high and people kind of the money is being more expensive to borrow. So we do have the inauguration coming in next week or a couple weeks, something like that. What does Trump want to do? Trump wants to lower these rates. So let's sit back and let's look at what Trump is doing right now. He's trying to strong arm Greenland. He's trying to like buy Greenland, do some stuff. He's trying to turn the Gulf of Mexico into the Gulf of America. We see him strong arming all these different places. He
Yeah, but
probably got
you know why he's doing that with Gulf America, right?
yeah. So it's about that oil. It's definitely probably about
Yeah.
that oil.
We will
Well,
not allow you to drill in the Gulf of Mexico. Cool. It's now the Gulf of America. Problem solved. We never touched the Gulf of Mexico. Yeah, it's genius. Go
exactly,
for it though, man. Finish up.
exactly, man.
Phrasing.
So
Phrasing.
yeah. So a lot of things I think he's going to come in and try to strong arm, and I think the Federal Reserve chairman, if he's not colluding with Trump and what Trump wants to do, I think he's going to try to strong arm him out of that position. He can't fire him, I don't think, unless it's like something in the in the fine print that he can do. But for the most part, I think he's going to come in and he's going to try to do all he can to make them lower these interest rates, no matter how the economy is looking. So that's one thing that I could see happening. Other than that, I don't know what to foretell or what can happen for them to get some of these cuts and start something happens in the world of the economy and they have to start cutting rates. Man,
Well,
we're in a bad spot, to be
we are,
completely
and I
honest.
want to remind everyone. I think it was you and I that were talking about this before, FD, but I know I talked about it with Buck and everybody else. We have had a recession pretty much every decade in the past century. Every decade, every 10 years, we have a recession. And I call it the economic reset for a reason, because it really does. It resets all of the things that are building up tension. It's almost like an earthquake, right? You get all that tension and it just, you get little minor shudders and stuff, and everyone goes, okay, something's coming. And then all of a sudden it shifts and it's bad. But it resets. And then you have a whole other period of time before that tension builds up. That is what a recession does for the economy, okay? And we have those typically every 10 years. In 2019, if you go back and look at the FRED report, that is the Financial Report of Economic Data, the FRED.org, St. Louis Fed. We were starting to get indicators coming in 2019 of recessionary buildup. And then we hit the pandemic, the COVID pandemic, which caused them to turn on the money printer, stimulus out the wazoo everywhere. And it kind of took that whole risk. It threw some lubrication in that tension, right, of the two platelets of economic support and stability, right? And so they kicked that can down the road. They extended the time before that pressure needed to be released. Now we're seeing it build back up to massive levels again. We kind of as much as I hate the impact of recession on lower income people, below the poverty level, people that regardless of where you're at, if you're below the poverty level, you're paying pretty hefty prices for a recession. What the impact of a recession? Lower middle income will carry a lot of weight on their shoulders. Matter of fact, I would say that there's more programs in place for lower income impoverished people groups, population groups, because they have support already there. They already have social programs. The lower middle class, they lose homes, they lose cars, they lose small businesses. So I would say that it's really, really bad. But lubrication and release of pressure. Got it. You got it, Eric Wallen. So when we have that reset, though, it really does take all this tension off and it creates the economy to be able to run again without that pressure buildup. And so we are due a recession, guys. We're way overdue a recession from 2019. 2009 was when the 2008 crash happened. So looking at this data that we got today, kind of just, the more that they fudge those numbers and they go, okay, yeah, numbers are good, and then they have to come back and do a revision, that's just lubrication. It's not really stopping the pressure, it's just extending it. But when it happens, it's going to be bad. Let's jump over to this article and talk about this real fast, and then we'll get into Bitcoin. If you want to go ahead and have Bitcoin ready to go on your TA side, and then we'll knock that out. I'll show a couple of levels, and I want to talk about Ethereum after that. 10-year Treasury yield spikes to the highest level since late 2023 after hotter than expected jobs reports. U.S. Treasury yields jumped to the highest level after the latest job reports came in stronger than economists had forecasted. 10-year Treasury yield added nearly 10 basis points to 4.778. Told you guys it was almost at 8% this morning, 4.8%. The 2-year Treasury surged around 12 basis points to 4.377. Remember, that spread between the 2-year and 10-year, when it hits that 0.5, 50 basis points, also very bad there too. 1 basis point is equal. We know about that because I teach my alumni non-farm payrolls. We talked about that data coming in. Fed meeting minutes from December released on Wednesday showed that officials were worried about inflation, and the impact of President-elect Donald Trump's policies, and indicated that they would be moving more slowly on interest rate cuts in 2025. We're expected to see 2. That's what we're expected right now to see is 2. But of course, if inflation keeps going up, then obviously we're not going to even maybe see 2. We may only see 1, and investors want to see cheap money. The quantitative easing is what they want to see. And we're still in a quantitative tightening cycle, guys. Don't think that has left. So they got to cut those rates. And until they do that, investors' sentiment is going to be weak. FD, let's jump over to your chart and let's take a look at that. And then let's come back. I'll give a couple little sprinkles on some Bitcoin that I was showing you this morning. Then we'll talk about ETH and we'll see where we are at that point. But let's go ahead and jump over to your chart, man.
All right, cool. Like, so it's really not too much to talk about. We've been talking about these levels for like the past few weeks. And we got this line in the sand that we need to hold these lows here at about 91,500 to about 90,000. So as long as we're above that, I mean, it's really not anything that we can worry too much about on longer term frames or longer zoomed out perspective. What I am looking at right now is for us. So I've been using this. I've been talking about this over and over again. This 20-day modified moving average. So it's sort of like an EMA, but they just do a little bit different calculations and come up with it. So this 20-day modified moving average is what I want to come take out. If we don't take this out, as long as we're in between this 91,000 and below this 20-day modified moving average, really not doing too much. So we can pop up here. We almost came up here this morning before we got that news coming out, but we quickly got rejected from about 95K, which we talked about yesterday. We said yesterday on the nightcap that probably be looking out for some move up, overnight, possibly to about 95K, and then we'll see what happens. That'll be the decision point once we get that economic data coming out. We got it, and we started to dump a little bit. So what I want to see is, I don't want to hopefully we can stay around this. Because if you just if you're a candle trader, if you look at candlesticks and things like that, we don't want this price to come back down to about 93, 92. I wouldn't like that candle. I think that would be like an inverted hammer candle or something like that. I don't know what you call it, but I know it's a bearish candle. So I am looking at these candles, looking at how these candles are playing out. We had a little bit of like when we came to the bottom here, see we tried to push up, came back down, then we had these nice moves coming up, got back above that 100K, couldn't hold that, so that's more like a deviation, and now we're just back below here. So the bigger range, if we are to zoom out, would be between this 91K and this, basically between 100 and 90, and we're just in this big range. And we can just call these deviations when we came up above these. So it's really not too much to talk about. Now, if we're talking about trading, now we have to zoom in. Now we have to zoom in to like the hourly, the 15 and the 5. And I'm not really scalping right now. Market is really choppy. We did have all these green 1 hour candles. Like, look at this. I haven't seen this in a long time. Like, just hourly candles, green, got the dump. So it looks like we are starting to come up to potentially make a lower high from this mark, so possibly come back up here and then maybe start to dump back down. So we do have to watch this high to see how this plays out. So we just definitely want to take out this high. We take out this high, then we'll start to retest my area, that 20-day.
I want to talk about those hourly candles building up there real fast, because this is a perfect example of what we tell people all the time. Bulls climb up stairs. You have a visual representation there. Bulls climb up the stairs. Bears jump out the windows. There you go. It's right there in living color on those candles.
Yeah, exactly. So we took the stairs up, and then we basically took the elevator right back down right here. So we just want to really take out this high. For the bulls, we want to take out this high. We don't want to come up here and get rejected to make a double top here, and then we do, like I said, we have this downward sloping trend line that we want to break out above. So it's just really that simple. But for the most part, nothing has changed from my analysis over the past few days. Piper's analysis, everybody's analysis. Everybody's kind of looking at the same levels. So it's like any channel you go to, anybody who's doing TA, the levels are pretty much the same, and this is what it is. So we really need to hold. Forget everything else. We really need to hold these lows here at about 91K, 90 to 91K, and then we should be okay. No time to panic. Once we break that, I'll start sweating a little bit, but then we do have, I think Piper will talk about these levels below here, probably around 87, 88K, somewhere around there.
Yep.
And then
I'm going to talk about that in a second.
Really want to hold that. So I'll pass over to Piper so he can talk about the bear Piper, talk about the bearish.
I'm back. I'm back. Wearing the red shirt and everything. Y'all need to watch out. Let's jump over to my chart. Check it out here, guys. So the levels that we've been watching here that we're talking about is this right here. We're this level 92,640. This creates one of my downside boxes that I call the well crap, it didn't hold, referring to this box up here, right? Which is the hold this. We need to hold this line, right? Dropping this down here, guys, if we lose this level at 91,100, then we head into a value area low here on the fixed range volume profile, and that is just a downward slope of volume, right? So the further down we go, the weaker the support is becoming with that volume, edging in like that, right? So that's why I call it the Jesus take the wheel, because if we lose that, let's take a look at the fixed range volume profile over here, guys. If we lose this level right here, we pretty much, there's a couple of little tiny cliffs that Bitcoin's fingertips might be able to get a hold of. But for the most part, until we get down to about $76,000, which I call Bitcoin's last stand, runs all the way into the platinum pocket here. You can see this is a very key level here of resistance and support. It's also where our March all-time high was at when we broke it there back in 2024, way back when everybody thought we were on the way up and we're never going to pull back again. That level coming in at 73,887. So if we lose Jesus take the wheel, we're heading down there. I do believe that is probably a prime target at about $76,000. Biggest reason for that is right over here. Let's put this on the daily, guys. CME gap sitting right down there at $77,200. That would close that CME gap. We don't have to close these at all, guys. We can have CME gaps that run for the entire bull cycle and get closed in 2022. We've had that previously. I've showed you guys this before. Let's go back here and take a look. Had one about the same time period that was built back here in 2020, and it didn't get closed until 2022 on the way down from the bear market, the crypto winter. But right now, I am watching that CME gap, $77,000 there. When for these levels, that's why I think Jesus take the wheel. If we lose that big volume gap there all the way down, I did think that we were going to be heading down more, and the biggest reason for that was when I took a look here. You guys can see on the MVP oscillator. Shout out to Chart Prime. If you guys don't have it, you need to get it, because there's some amazing stuff that they have in their indicator package. Very, very good coding and algorithmic code there. You guys can see this prints bottom indication. That was a bottom. We had another one here. That was a bottom. We had more here. That gave us a little pump up. It was a local bottom. Had another one here. Gave us that pump up. We haven't printed one. Matter of fact, our indicator signal ribbon is flipping here on the daily for more downside. So I did not think that this was the bottom. Chart Prime's indicator, I put a lot of trust in them. I trade on them. They make me a lot of money. I was not seeing that at all on that chart. So I did figure that we had more downside coming today anyways, especially if we saw the 10-year yield pump up, and that's what we saw. Let's jump over real fast. Take a look at Ethereum, because last night I was talking about this level in the chat when FD White was live for the nightcap, and I said, guys, this line here, this is a key line, and we hit it there. We did a little bounce up, but it's also running with a quick overlap on the daily on the dynamic reactor. That is double confluence for that level. I called it back here to you guys. Some of you guys got in on that one. Shout out to you. But this line goes all the way back to November 22nd of 2022, and you can see for the most part, it has been our support level. Once we lost it here, we had a slight deviation, was resistance, and then support again. I said, guys, we have lost this back here. We took it back, gave us support. This is going to be a key level for us to hold. And right now, we have had a double test here since 20 December. So within less than a month, we've had two tests on that line. I do think that if we lose that line, we're looking at making a third deviation, just like we previously have seen. And then that's going to become resistance for us on the chart. Looking here on the oscillator for the daily, Ethereum does have a hidden bearish divergence. That is that orange line right there. Money flow is coming down. You guys can see that yellow giving us a nice little wave down. It's not really looking very strong. Oscillator ribbon very sharp to the downside, and volume is in the red. So I am seeing some weakness right now on Ethereum, obviously continuing that on because of Bitcoin's weakness right now. Also seeing the same things with money flow to the downside, low volume, oscillator ribbon, and downtrend printing there. So shout out to Chart Prime Indicators leading the way for us, showing us the light. They are the lantern. They are the lantern in the darkness of the night in these markets. So FD White, what else are you watching today? What else are you looking at? I do have another article I want to talk about before we head out of here about Bitcoin accumulation. But if you got some altcoins, you can go ahead and get those ready. I'll jump over. We'll talk about the Bitcoin accumulation trend. Right now, it's red, guys, and that's historically not a good thing. Let's take a look at that. FD will come back and take a look at what altcoins you're playing with today and what you're watching. I know you're not doing much trading, kind of pausing, but I know that your hawk eyes are looking at those next levels. So let's come back to that. Let's jump over. Is your chart. This article, there we go. Bitcoin accumulation trend score turns red, more decline coming. Let's take a look at what this is talking about. On-chain data shows that the Bitcoin accumulation trend score has observed a decline recently, a sign that investor cohorts have taken to selling off. Bitcoin accumulation trend score currently sitting at 0.21. In a new post on X, the on-chain analytics firm Glassnode has shared an update on how the accumulation trend score has been looking for Bitcoin. The indicator calculates its value not just by taking into account for the balance changes happening on wallets, but also by weighing the changes against the size of the holdings themselves. This trend score refers to an indicator that tells us whether Bitcoin investors are accumulating Bitcoin or not. If they're hodling, are they diamond handsing? That's what it asks for. When the value of this metric is close to 1, it means that large entities on the network or a large number of small addresses are participating in net accumulation. On the other hand, it being near 0 implies that investors are in a phase of distribution or they simply are not buying. Here's the chart that shows the trend of the Bitcoin accumulation trend over the past year. And you guys can see here right now we are in orange, which means that it typically will go to red before it comes up. It was in red, came up to orange, could be heading back down again. In the graph above, the dark blue violet shade corresponds to high value in Bitcoin accumulation, while the orange and red suggest values close to 0. From the chart, it's apparent that Bitcoin accumulation assumed a dark shade during the last couple of months of 2024, implying that whales were participating in heavy buying and helping fuel the run. That was right about the time that we had the Trump pump, right? Towards the end of the year, accumulation from the investors started to drop, and this year the picture has completely turned upside down. Glassnode also shared the data for another version of the accumulation trend score that breaks down accumulation distribution behaviors across various Bitcoin cohorts. And that one also showing a lot there in that most recent month. A lot of sell-off there too. So just wanted to talk about that, guys. People are not accumulating the Bitcoin right now. They're selling on you. So if you guys are in profits and you feel you want to take some profits, remember, no one's ever gone broke taking profits. Just be aware. We are in high volatility right now. We do have the inaugural day coming. Could turn all this around. You never know. You never know. The Dems may do a Hail Mary before January 20th and go, oh, yeah, look, we found another 1 million government jobs. Not government jobs. We just found another 1 million jobs. But I do think that come February 7th, when we get the annual Bureau of Labor Statistics revision, it's an annual revision on job numbers. If it confirms 800,000 jobs plus, which is what is projected right now as of August 2024, 800,000 plus jobs don't exist that they said existed, then that would be in line with, hey, look, congratulations, Mr. President, enjoy your term, and here is your crap sandwich with a side of doo-doo, because it's not going to be good if those numbers come out like that, and they would just be handing him a straight mess to clean up. He very possibly could spend his entire 4-year term fixing things, not building and making things better. So FD, thoughts on that before we jump over to your chart accumulation right now, and what is possibly coming for this administration come February?
He definitely has he definitely taken over something that's not looking too good. It's not looking too good. So I don't know what, I haven't really done any super due diligence on how tariffs will affect, or if it's just something that is he really going to push through with these things? Is it something like a bargaining
I think a
tactic?
lot of it's negotiation. I think a lot of it's negotiation tactic. But if he does do tariffs, it will raise our inflation rate. The initial impact of that will raise inflation. But it will also entice businesses, because they like profit, to go, what is the cheapest way for me to obtain to get profit, right? Get said profit cheaper. That would be to find alternate purchases or manufacture inside of the United States. And so, or one of these nations that Trump used tariffs to negotiate with, right? And then that will cause more jobs in the United States, which will cause more money into the economy, which will cause the remember. And at the same time, he's talking about cutting federal income tax, which means that if prices do go up, you now have more money to pay for it. Long game, that's what that is all about. So, but yeah, I just wanted to clarify that for the viewers.
So I think Lunar Beach. I don't know if you mentioned this. Lunar Beaches gifted some memberships.
Oh, my man, Lunar Beaches. Let's go see who all got them. Can you read them off there? Do you have it in front of you?
So Vincent B got a membership. Under the Gun with Crypto Bullets got a membership. That's a
Love that name.
yeah. Road Glide got a membership. Simron got a membership, and Frank Fit for Life Crypto also got a membership.
I like Frank Fit for Life. I like that dude. I like all those people. All of you, welcome to the alumni. I'm glad to have you guys here. And shout out to Lunar Beach's Crypto, bro. You are the man. Let's jump over to your chart, FG. We got about 19 minutes. I'm sure you can rip on some altcoins there, and then we'll come back and take a look because we are losing those levels, guys. That everyone was running that pump up. We would look like we were rebounding. No, not when the 10 years doing what it's doing. I'm sorry, folks. FD. Show us some light, man. Show us some hope here. What do you got for us, bro?
Yeah, man. So what I'm looking at right now is a lot of these coins, they got pumped, even Bitcoin, but the volume is no pump with no volume. Like these pumps can't last with any volume. So what I'm looking at XRP, I made a video about this maybe like 3 or 4 days ago. XRP has one of the most bullish charts in crypto when it comes to like the high cap coins, man. So I was looking at XRP and I'm like, okay, we are testing the top side of this flag. I love my flags in bull runs. Like in a bear market, they kind of don't play out as much, but in a bull run, these consolidation patterns, these bullish consolidation patterns really play out a lot more to the upside. So what I'm looking at, I also pulled a fib from the top. So we have that 618 coming in at about $2.50, which is also coming in confluence with the top side of the bottom side of this, the top part of the flag. So XRP isn't looking too bad. It's kind of holding strong. It's at the 382 right now at $2.26, somewhere around there. So I am looking at this. We could potentially come back down to this area at about $1.90 to $2. And that was the part, or that was the place where we had that huge breakout from $2 basically all the way up to $3. So hopefully the market can turn around, or hopefully we can keep consolidating. I mean, we are getting, even if we pull this out, we are getting a little bit close, to coming back down, coming to the apex of this triangle. But I mean, it just depends on what Bitcoin does. It really depends on what Bitcoin does. We're not in the market right now for altcoins to separately run. We need Bitcoin strength. This is what we need. And usually if Bitcoin runs and then it starts to consolidate or come down a little bit, we can get some, we can get some of these alts to move. But right now, without any catalyst or any news that comes out, maybe some bullish XRP news may come out, may get up as a breakout. But for the most part, the overall markets are bleeding. No volume is coming in. Volume is very low. This is on the daily. Like volume is extremely low while price is coming down. So we could potentially come down, possibly back down to this $2, $1.90 to $2 area. That's where I would bid for XRP. But I'm really just looking to break out. Hopefully we can, keep, hold this 382 and then potentially pop out. And this move, like this would be a huge move, in my opinion, coming from this move down here all the way up. I'm looking at a quick 100% move. But this is predicated on if the market turns around. So it's really like, if you're not scalping or doing quick day trades, it's really like anything that you can do but sit on your hands and watch what Bitcoin does, because a lot of these altcoins are just like waiting and seeing what Bitcoin is going to do. Like this is a mega bullish setup. Like this, if Bitcoin was doing what it's supposed to do, this would have been blasted off. So now we're just sitting on our hands and we're being patient. And when you trade, you have to be patient. Sometimes you have to wait for these setups. So we're not invalidated yet. This pattern or this price action is not invalidated. It's just a consolidation period. We're just going to see what Bitcoin does. And a lot of coins are looking like this. So you can go to some of the top altcoins and most of them are looking like they're just waiting on what Bitcoin wants to do. So XRP is on the top of my list. XRP has been one of the strongest coins ever since the SEC, has basically backed down. And this is the one I'm going to trade. I hold enough, so this is going to be the one I'm going to trade. And 100% move, I'm thinking $5 because I'm still thinking that we're in a bull run. I'm still thinking that we're gonna eventually start to turn this market back around. So I'll be looking at this. This will be one of my top trades to take from a macro point of view. Just a nice long swing trade, probably up to about $4.50 to about $5. But we got to see what Bitcoin does. And like I said, this volume, all the volume that's coming in, like look at all this volume we had, and now look at it. It's just coming down. It's just falling. All volume is falling off a cliff. So, and I mean, it's very low right now. So we can't get any breakouts until volume comes back into the markets, like we talked about a little bit earlier.
Yep. Yeah. That accumulation, that's part of that volume too, right? So there you go. Shout out to everybody. Excuse me. Shout out to everybody that's joined us in the chat right now. We got like 30 people over on X watching us right now also. So if you guys are over there, don't forget to come over to the YouTube channel, hit that like button, and help us out on the algo. I appreciate everybody watching us wherever you are. Yeah, what's up, man?
So if you guys are over on X, make sure you follow me on X, man. So I'll be getting rid of all these bots that come over to my thing. So I'm right under 1,000 followers. I'm maybe at like 930, 940. So I'm trying to get my X game up.
Don't worry, it's coming right now. I guarantee you there's a link about to drop in the chat because you know why? Because I got Alexandra G in the house with me. That's why, because the mod queen is here. And I don't ban her on my channel, just so you know, FD.
I feel so bad. Man. I took like 5 minutes. Like, I'm so sorry. I'm new to the stream. So we got that established. Now she's
all right, let's jump over
there.
Let's jump over and check out SUI. We gave a trade setup on this actually this week. And that trade setup was based on the 0.236 here. I had some old fibs running here. I was like, look, we got all this golden pocket bounce here. We got our big bounce off of the platinum pocket. I'm going to go ahead and leave these levels up despite the fact that we broke some variances here above that 0 line. I said, this is your level. These are the lines that I drew on here earlier this week. Let's go ahead and take those off. Brush marks gone. And then let's take a look at what we're seeing here. We got a nice bounce on the dynamic reactor, the quantum reactor, and this 0.236 that has given us a little pump up. I am a little concerned about Bitcoin's price bringing this back down. But guys, my zone, I'm going to go ahead and just drop it here. This is going to be where I might look for a nice little trade setup right here between that quantum reactor and that 236. Those levels coming in $4.58 to $4.45. You can see that despite what's going on with Bitcoin in the markets, money flow is still good. Volume is starting to get a curvature up, and we do have a blue transition ribbon after getting the oversold and that uptrend down here on the Oscillator Pro, guys, which called pretty much that bottom right there. Shout out to Chart Prime. Shout out to SUI holding it up, holding down the fort for us on some money making. There's a little hopium for you guys right there on the chart. So, FD, got anything else you want to go over? I mean, we can keep going. We can. What do you need? What do you need to do, man?
Oh man, let's see what we're looking at right now. I don't really have too much more, but I mean, we can look at. So let's look at Solana really quick. Cause Solana, same thing. We've been having a lot of volume drop off, but this, I mean, look at this. Like we came and made this BART, and this is on the daily. BARTs on the daily are brutal. This is a brutal pattern. So we came up to this, perfectly kissed $225, and then we perfectly came right back down to my line at about $1 or $180. So right now it's just everything is predicated, like I said, on Bitcoin. We had this downtrend, broke back above it. Bart Simpson came back down. Now the first step is just, getting back above these two levels here, getting back above this $190 level, $200 level. Like I said, right back above that $200 level, which would be breaking this downtrend. But we do want to just start taking out highs. We have this high here at about, like I said, 200 to 201, and then coming back up to this $220 level. But right now, we don't even need to worry about what's happening on the upside. We need to be worrying about the downside because it's not looking too good right now. It's really not looking too good. Now we have to go over the weekend with lower volume when we just got this bullish economic news, which is putting pressure on the market. So now are we going to dump over the weekend? This is my fear. So what I'm doing right now, I'm not doing any longs. I'm trying to see how we close the day. Maybe we can get some pump. Maybe this is just a nice little downturn before the weekend starts. But I don't like the way, crypto looks right now. I'm not saying the bull run is over, but when it comes to these altcoins, I really don't like, how they're looking. Volume is falling off. We got some bullish news in the economy, which is putting pressure on risk assets going into the weekend with lower volume. So really careful right now. If I'm looking for anything, I'm looking for quick shorts. That's what I'll probably be looking for when it comes to some trading over the weekend if I want to try to make a few bucks here or there. But I'm not betting on getting too long over the weekend. We'll have to wait till next week, which I think we may have like CPI or things like that. So we have a lot of fundamental news and fundamental drivers coming in. So you have to, a lot of people don't take these levels into account, or they don't take fundamentals into account. Me personally, I'm probably 70-30, 70 technical, 30 fundamental. So I think fundamental drivers are what's driving the market right now. So we do have to take those into account. So when it comes to Solana right now, I would probably be looking for some sort of a short if we start to lose this level between 180 to $190. Let's just draw it out right quick. So if we do lose this level here, I'll be looking possibly for a retest and getting back into this level here, getting back into this zone with the top side being 180 and the bottom being about 160. So that range right there is something that I will be aiming. If we lose that 180, I'll be aiming for 160 for a nice little short. But we do have the 200 coming up, so we might want to get a bounce there. But if we lose that, yeah, we're definitely coming back down to that $1 or $160 level for for a Solana. So I'm leaning short. I'm leaning more short in the short term, especially going over this weekend with this already have lower volume, like I said, and then we have markets coming down into a Friday. So I'll be looking to go short this weekend.
Yeah, I agree with that. Also, I just got some more economic data that just came in, and then I also just dug in a little bit deeper. Let's jump over, show this real fast, and then I'll tell you guys what's also happening with gold. I just got a notification on X from my TKL private feed, so I want to show you guys that too. Let's jump over to the news cam, bring FD and I both up here, and let's talk about this. I'll make sure it's at the top here. Guys, we talked about all this data that came in this morning, but I put this on impact of one. There's some other things in here I want to show you. Manufacturing payrolls, guys. Manufacturing payroll. Remember, manufacturing, retail, services, construction, right? Big piece of the U.S. economy. Manufacturing payrolls for December was expected to go from 25K, which, by the way, got revised. They were estimated between 5K to 29K, right? Way down or a little bit up. Actually came in negative 13,000 points on the manufacturing payroll. Not good at all there. And then the other one that I wanted to show you that just came in at 8 o'clock here, Michigan consumer sentiment. This is a basis of the Michigan Fed, how they are feeling about the consumers continuing to buy in the future. Was expected to be at 73.8 to 75 off of 24 in the previous. Guys, 73.2 came in lower. The sentiment is sucking right now. Michigan consumer expectations also expected to be higher, came in lower, 70.2. And then the current conditions chart, a little bit better than what it was, but not as good as what they thought it would be. Inflation expectations, they're expecting 3.3%. That is definitely not the direction that the Fed wants to go. So I wanted to bring that stuff up there and show you that data. And then also let's jump over here to my solo cam, and I'll bring this up for you guys. Let's go here. Chart go away. Phone pop up. There we go. Guys, right there, you can see the TKL private feed gold explosive move higher this week, now pushing $2,730. Daily RSI extending its rally off of a negative 50 uptrend support. So, gold is where a lot of money is moving to right now, since it's not going to bonds and it's leaving the markets. I just wanted to bring that to you guys, let you guys know about that data. So, not good, dude. Yeah.
So when it comes to those payrolls, what does that mean? That negative 13K or negative 13%, which one was that? So does that mean that people are losing, like, what
total payrolls? That means that there's probably cutting jobs in that sector.
Yeah.
Yep.
Okay, good.
Manufacturing payrolls in the United States decreased by 13,000 in December 2024, following an they upwardly revised the previous month to 25K. And then compared to the forecast of 5K, manufacturing payrolls in the United States averaged 3.68 thousand, which is in the millions, right? 3.68 million from 1939 to 2024, and an all-time high of 655,000, so 6.5 million in April 1946. Right now, coming in pretty freaking low, dude. So,
Basically,
um,
so basically, the government jobs that have nothing to do with the growth of the economy is going up, while the jobs that have something to do with the growth of the
yes.
economy is going down.
Actually,
Okay.
let's jump over here. I'll show you the even more interesting one. Look here, manufacturing, which is a huge piece of the economy, it had negative 13,000. Look at government payrolls. 33K versus 30K was expected to be 15. They actually, government is paying out your tax money while the economy is shrinking to keep these numbers up, guys. When it all shakes out and they can no longer keep boosting up government jobs, government payrolls to keep things where they, look better than what they are, when that no longer can be done, then the house of cards is going to start falling. It's not. I keep saying this to my members. It's not a matter of if. It's a matter of when we get our recession, guys. If it's in 2025, and we'll talk this out here real fast before we go. If it's in 2025, then we're probably going to see a very cut short run for the crypto rally that we typically get in the post year halving. Bitcoin has never existed in a contracting economy or a recession, so everything's out the window on what we know as the norm, because the norm is no longer status quo, right? But if we had this in 2026, if the recession actually if they stretch it out as long as they can, and for some reason, somehow we make it to 2026 before we see a recession, what does a crypto winter, when crypto bear market typically has taken place, look like when it's on an avalanche of a recession? That is a topic to think about. So,
I got something
FD,
for you, Piper, before we get out of here.
what do you got?
So I hear you. I definitely hear you. But knowing the type of president, knowing the type of business person that Trump is, I don't think they're gonna let it do it too long. I think, like you
No,
said,
I think it'll be quick. I think it'll be quick. And I would rather it be in 2025. We could have the pullback. We're in quarter one. I told you guys I was taking profit in quarter one a long time ago on this show. Quarter one, taking profit. It's worked out well for me, right? We could have the recession take place in the summer. It's a 3 to 6 month recession. It's over by end of quarter three, and we get a rally back in quarter four, finishing out the post halving year. But depending on how far down we pull, we might just get back to a double top of around $108,000 to $110,000, which would be very much like we saw in 2021. Quarter one done, went down for the summer, 50% retracement, came back up, barely broke above the previous high, double top into the bull run. We could see that with the recession packed in the middle, a little recession sandwich surrounded by bull market bread, and still look like 2021 with the double top cycle again. So it'd be interesting to see for sure, FD. Very interesting to see. And we could still do that, get that economic reset button going on from the recession, and then move on, and things are back to normal, and we're ready for a bear market, and we'll short this thing all the way down, looking for those bottoms. So video coming out soon, by the way, on how I find the very bottoms of the market to buy. People always say you can't buy the bottom. Yeah, you can. If you got Chart Prime, I'm going to do a video on that. So, FD, I appreciate you joining me today, man. You got anything for these people on the way out, bro?
Oh no, man, it was a good show, man. I appreciate you having me, and stay tuned, man. We got a lot to cover. It's going to be a up and down 2025. So make sure you guys are tuned in, locked in, all bell notifications over on Piper Academy, because we bring some of the best TA news analysis on the internet.
Facts. Facts. All right, guys, we're going to head out of here. If you haven't done so yet, smash that like button, share this with a friend because sharing's caring. If you watched all this on X, please come over to the YouTube, drop a like over there, subscribe, hit that notification bell. It's how we support all these great content creators that we have over here on the Piper Academy Network. 5 live shows daily. We have Trade Intuition going to be doing Trade Academy today at 4 p.m. Eastern Standard Time. No nightcap tonight. It's Friday. I know this now, FD. And no markets after dark. We'll all be back next weekend. Next week on Monday, guys. Don't forget, spend time with your family this weekend. If you're going to watch the charts, keep one eye on them, one eye on what's important in this world. And I promise you, it is not crypto this weekend. It's your family. So spend time with your loved ones. Everyone out in California, be safe. And all of the alumni, I will catch you back here next week. Until then, trade safe. And as always, use some risk management. Love you guys. Later.
I don't know what they keep telling me. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the SUI train ready. What a line from OCI, former Mexican spaghetti. Yo, crunch crypto with a deep dive to reject dime. And if you like the visual powered by Car Prime, then you will part of that. Keep going, cause we gon' keep on rolling out the wheels flow low. Sound off to get with them. The ZTS rhythm. Alexandra.
Yeah, that's my alumni, you know what I mean?
That was awesome, dude.